Hey, good afternoon, everybody. It's my honour to be able to present to you briefly this afternoon, particularly in front of honoured guests, Deputy Prime Minister Hui and Minister Jung. Dr. Hui and Mr. Jung are both proponents and advocates of good government, and that means they are friends of business. So it is wonderful to see them not only here today, but actively participating in today's discussions as well. Tôi làm việc ở đây là 20 năm rồi, nhưng khi nào nói tiếng Việt ăn mắc cả. So I will not be speaking in Vietnamese this afternoon with my apologies. We have an excellent panel, including the Minister going to speak, so I will talk very briefly about some of the things that are important to the M&A world this afternoon. If I can have the next slide. I can't click here, so I'll briefly talk about what's happened over the last year or 10 years, a little bit on the outlook, and that comes from a survey that many of you have participated in over the last few months that KPMG has been participating or been conducting, and thank you to everybody that has given us input to that. I'll briefly summarise that, and anyone that wishes to read that in more detail, look for this publication outside, or you can download it from kpmg.com.vn website to give you greater analysis of some of the things that I will summarise. And I'll give some of the anecdotal feedback, both from that survey but also from KPMG's experience working with many of you, either deal makers or target companies in M&A over the last few years. So to talk briefly on the first topic about M&A development, you know KPMG, we're accountants, so we love to talk about numbers, and I think the key thing to take away from the numbers is that, as we all know, the M&A environment, as Dr. Hui mentioned, as a way to improve efficiency in the economy, to improve businesses, is becoming more and more active, and the nature and size of deals are becoming more prominent as well. $9-10 billion just last year. That's more than 5% or thereabouts of GDP. So the M&A sector and the activity that's happening in the M&A world is becoming increasingly important to Vietnam's economic success, and that's important. You can see a 17% cumulative growth rate over a decade. Every year, M&A and the value and number of M&A deals is increasing at a rate which is higher than both GDP growth and FDI into Vietnam. So we're seeing the velocity and the speed that the M&A world is picking up as being increasingly important as well. The number of deals running at around 150 a year is also increasing year on year as well, and I think that's putting a lot of pressure on advisors, a lot of pressure on deal makers to execute deals, and I'll talk about some of the challenges there, and we expect that to continue through 2018-19 as well. And as Dr. Hui just mentioned, of course, last year, the really flagship deal, the investment of Thai Beverages into Sabeco, a landmark transaction for Vietnam. I know a number of people in this room were involved in that, and I think it's something that we've already seen through Thai Bev coming into that company and its relationship with the likes of Leicester City. The ability of a Vietnamese brand and Vietnamese company to project globally and to participate globally through those deals. The sort of thing that wouldn't be possible without M&A, and that is an illustration of just how the M&A environment and the bringing of international money and expertise and so on into Vietnamese companies can help them to compete globally and to build global platforms and to take their business globally as well. So I think that's a really important aspect. If we look further at some of the numbers and where they're coming from, just delving into where over the last 10 years the investments have come from, unsurprisingly, Vietnam's important economic partners, likes of Japan, feature most prominently in the M&A world. And at KPMG, we see significant interest from corporate Japan in continuing to invest and build their relationships in Vietnam. Singapore also critically important, really as ASEAN's financial centre, we would expect to see Singaporean companies, including organisations like Temasek, world-class organisations, doing deals in Vietnam and investing in Vietnam, but also international investors using Singapore as a hub to invest into Vietnam is also important. We see the United States appearing as well in the top 3 or 4 investors over the last decade in the M&A world. And this, I think, is a reflection particularly of the US private equity industry and the ability of US PE managers to bring the enormous amounts of capital and expertise into Vietnam to do deals, to invest, to improve Vietnam as well. And then, of course, the traditional partners, particularly from Southeast Asia, a couple of companies from Europe also coming out as well. Thailand, of course, in dollar terms, really dominates last year, but I think that's a reflection of particularly the Subico deal. But Thai companies in general have looked at Vietnam as a great place to invest and to build their footprint as they expand and take advantage of the liberalisation under the ASEAN Economic Community. If we look further, talk a little bit now about some of the feedback we got from you all in relation to what you see happening or what you predict is going to happen over the next 10 years. If we look at the likely sources of investment, our survey participants continue to believe that Japan will be the biggest source or biggest investor into the M&A world, and I think that is really important. And of course, with initiatives like the TPP or CPTPP, which the government is participating in, that naturally makes Vietnam more attractive to Japanese and CPTPP participants as well. We expect to see that continuing. Korea was very, very interested in Vietnam, as those of us who have been around for a long time remember back 15 more years ago. They're really coming back. There's a lot of interest from Korea, corporate investors and also private equity and financial investors into Vietnam as well. So that's important. Interestingly, although China has not and does not feature in the historic M&A record in Vietnam, the survey participants, that is a number of you in this room, indicated that you believe Chinese investment is going to increase. I think that's perhaps just the fact that China is, of course, now a major investor in lots of places in the world, and there's lots of visibility of Chinese investments, particularly into Western countries. But we'll see if that plays out as corporate China in particular looks to participate in M&A deals. I'm not sure if it'll be as prominent as the survey would indicate. And we continue to see interest from Southeast Asia and Thailand, or the expectation that we'll see ongoing interest from those places as well. I know I'm going through this quickly, but as I said, you can get the data from our study. If we look at industries, I think it's no surprise that most investors looking at or predicting where M&A is going to happen particularly focus on the Vietnamese consumer story. It comes from the demographics and the rising income of Vietnamese people, from the propensity of Vietnamese people to take up new consumer trends and products and so on. So the expectation is that we'll continue to see investment into the food and beverage sector, into the FMCG sector as well. The government, of course, is continuing to modernise and liberalise the healthcare system, the pharmaceutical sector, so there is an expectation from investors that there'll be M&A opportunities into pharmaceuticals and life sciences as well. That's a good thing. Real estate as well as a sector that continues to be on the agenda and on the horizon of potential investors, and we've seen, of course, some major investment into the real estate sector and M&A deals, particularly as the local governments in Ho Chi Minh City, but around Vietnam have taken action to make sure that dormant projects are activated and that if investors aren't taking action, that they move on. And the expectation is that trend will continue as well. I think interestingly here, what isn't here, there's some of the likely hot sectors that Dr. Hui just mentioned, like the banking sector. I think that the message has got to get out more that the state bank is increasingly open to participation of foreign investors into banks, particularly the M&A world. That's something that has to continue and will continue. And I think Dr. Hui's mentioning of the non-banking financial sector, the finance companies, securities companies, the fund managers and so on, we certainly see the likelihood of a lot of M&A interest in those sort of spaces as well coming out. The other area that's not here is infrastructure. Infrastructure still tends to be state-dominated in Vietnam or invested into through FDI channels, but as private participation increases into infrastructure, then we would expect to see more M&A there as well. And we'll certainly be watching, Dr. Hui just mentioned sectors like agriculture. I think that's really interesting. You know, Vietnam's a major exporter of agricultural commodities, and I know if that sector does become more investable, that a number of people in this room will be looking for opportunities to invest in that as well. Moving on to what investors look for when they are, or the reasons motivating FDI investment. We go to the next slide. It's areas that you would expect. It's the strong growth potential. And, you know, we all know that Vietnam is outperforming its peers in Southeast Asia. It's the strongest and fastest growing economy in ASEAN. Investors are looking to tap those sorts of growth opportunities, and the ability of Vietnamese companies to continue to grow and to outperform corporate opportunities or investment opportunities elsewhere are what investors are looking for as well. Management capabilities are also on the wish list or the target list for companies looking for M&A opportunities. And I think this is a really positive trend coming through the feedback that people are looking to invest in Vietnamese management and the quality and skills that Vietnamese managers have and entrepreneurs have to run and build good companies. So that is a positive sector, a positive trend we think coming out of what investors are looking for when they're looking to identify M&A targets or companies that they want to invest in. If we look at how people find investments or how they source their targets, I think here we see something very interesting, which is that the primary source of investment targets is existing relationships. And we've seen, for example, in the Japanese sector, Japanese trading houses buying up or investing into the partners that they've traditionally done business with. We see multinationals buying into their distributors in Vietnam or to their retail partners in Vietnam or the manufacturing partners in Vietnam. We see financial investors like the fund managers or the private equity players establishing a small investment and then increasing that investment when they gain confidence and build it. And the second highest source of investment is through networks, through direct contacts, through the relationships that you all have. And that's, you know, this is why forums like this are very important, because this is where people can find partners to invest in and establish relationships and ultimately source investments. I think, though, what this demonstrates is that we are still at the infancy of Vietnam's M&A industry and the sort of trends, because you would expect to see in a mature M&A market, as we would see elsewhere in Asia, or certainly in the developed world, greater use of advisors, of intermediaries, of research-based investment, and less reliance on personal contacts or existing relationships to identify M&A targets. So this survey, I think, is interesting because it's the first time it's been asked, and it has set a benchmark. I would expect to see over time the numbers of investments being made through existing relationships or through direct personal contacts reducing, and the number of investments being made through research-based analysis and the use of professional advisors and what have you to increase. So let's see how that goes on. Another interesting factor on the next slide that we noted was that companies making M&A deals don't typically look very far in Vietnam. Most companies look at maybe 2 or 3 possible targets when looking at M&A opportunities. And this is really quite unusual. You would expect to see M&A investors looking to invest in the market, looking much broader. particularly given how quickly the private sector has developed in Vietnam over the past few decades. The number of companies, the number of targets, the depth and maturity of the industries that people are investing in, to come to just to only look at one or two or three possible targets perhaps shows that investors can and should spend more time learning about the industries they're looking to invest in, building up greater target lists and exploring beyond just the personal contacts and the relationships that they have. And that, I think, is the expectation that we would have. And I'm sure when the MPI and VIR organise events like this is the expectation, that we would see professionalisation and more analysis and greater examination of the market before making M&A investments. And that's something that we would expect to see over the coming years. KPMG, we get involved very closely with the due diligence process, as you can imagine, and we get a lot of feedback on the concerns that investors have when looking at making investments or conducting M&A activities in Vietnam. And I don't think there's any real surprises on this list. Deputy Prime Minister Hui just mentioned the quality of auditing and accounting standards, or the quality of financial information, and the challenge that is already creating in the privatisation of state companies, but it's equally an issue in the buying and selling of private companies as well. So we see the investors saying one of the number one concerns they have is really the quality of historic financial information. This is things like maintenance of multiple sets of books. It's the financial numbers that are being prepared, presented to the likes of the tax authorities. I see Dr. Fung here from the Tax Authority, Ministry of Finance. Also causing problems with investors when they come to look at the numbers and saying, you know, what you're telling me and what we're seeing in the books don't match. So you may be optimistic about your company, you may believe it's doing well, the numbers don't tie up, and that's a particular concern. Interestingly, the second point there, the responsiveness, the preparedness, the willingness of investors to share information continues to be a challenge. And I think there is, particularly in the private sector, but also in the state sector, a lot of caution from companies at sharing their information with others, because they may fear that it's not going to be believed, they may fear that it's not right, they may fear that it's going to be misused. And this is a problem for investors, because if you're going to invest in somebody and you want to back them, you really need to have access to their information, to their management, to understand their business. But we see it coming through as a real concern that people want investors, companies want investors, but they don't want to share the information to enable those investors to make decisions, and I'll talk about the consequences of that too. Legal issues. I know there's a number of lawyers here in the room that would talk about the challenges that compliance, that the title of properties that are sitting within companies, the ownership of property, the validity of contracts, the ability to enforce contracts in the court system, all of these sorts of things, or even just the quality of the contracts themselves, things like sourcing of raw materials or sales, these things come into play as well. Tax issues, tax exposures are very important to investors. A company can change its tax profile when it brings in investors, particularly foreign investors, and those investors want to make sure that the company's been complying with its tax obligations, doing what it's supposed to do to fulfill its obligations to the government of Vietnam. So those are the sorts of things that are of concern. In terms of deal breakers, that is the sorts of things that result in M&A deals falling apart during the due diligence process or during the negotiations for the actual investment. We see a really big focus here on valuation expectations. This is possibly the greatest challenge that presents itself when it comes to attracting investors to do M&A deals. The truth of the matter is that investors investing into companies have options. They don't have to invest in a particular company. They don't even have to invest in Vietnam. The market for capital is global. And Vietnamese investors or company owners typically have an expectation of their company's value which will not match that of the financial investors. And this is a big challenge to bridge. So valuation expectations continue to be a challenge. What has, of course, helped over the last few years with the development of the stock exchange and capital markets is that companies can see how investors value other companies, perhaps the company themselves, if they do an IPO, as the state SOE privatisation process sometimes involves an IPO process to help set a market value, but also in industries. If you're participating in a certain sector, you can see the valuation being put on your peers or your competitors through capital markets. So we're starting to see greater data being available to help companies value targets and to help companies raising capital understand what the valuation of the companies are, but nevertheless we see it as a challenge. Due diligence findings, as I just talked about, are a challenge as well. There continue to be challenges around regulatory and licensing issues. Dr. Hui just mentioned the government's desire to drastically reduce the bureaucracy around licensing and the approvals process. I know Minister Jung, the MPI, is also actively looking at this topic, but it continues to be a deal breaker as companies get closer to deals and realise that they need approvals or they need licences that are going to be difficult to obtain or may take longer than they expect. This is something I think that the government is focused on and will continue to focus on to improve as well. The alignment of business plans is something that at KPMG we think deal makers need to spend a lot more time on, which is understanding what the company is planning to do and where it's going and how well those plans align with the plans and the objectives and the ambitions of the investors as well. And all too often there is not enough discussion held prior to making an investment between the investors and the targets on what the business plans of the target are and how well those plans align with the plans of the investors. So that's a challenge. The last point I think that I'd like to make before we get into the panel, because I know, as I said, it's a good panel, is that there is, because of a number of the issues that I just mentioned, a relatively low closing rate in Vietnam. That is, a lot of deals go through pre-deal considerations, through negotiations, through due diligence, through getting to the point where they're about to seek regulatory approvals or sign a contract and they fall over. And in fact, from the survey we saw something like only 2 out of every 5 deals actually getting through diligence. That is, 3 out of 5 deals are falling over at this point. It's quite a low closing rate, and that's something that I think the people in this room ought to be considering, because low closure rates represent a great inefficiency in the M&A process. That is, you spend a lot of time and money and energy, both from the target and the investor, and if you don't bring the deal home, if you don't finally close the deal, then ultimately that's expensive for all of you. So it's really incumbent, I think, on us all to think about how we better understand the challenges of doing deals, how we improve the process of identifying targets, of valuing them, of doing due diligence, and so on and so forth, and how we deal particularly with that sticky issue of valuation early in the process as we can. That's how we can get better deal closure rates. So thank you, ladies and gentlemen, for your attention. I did go fast. I apologise, but do get hold of this study if you want a more detailed analysis of the KPMG survey. And I know that some of the things I talked about will come out in the panel discussion next. So thank you very much.